Well, I want to welcome everybody to the Valuation Masterclass Boot Camp final presentations. Today, we're going to see presentations from Eduardo, and he's going to be presenting BYD and the valuation and his forecast there. And then also, Mutia is going to be presenting about Toyota. These are two interesting companies growing in a very different style when you compare Toyota's kind of slow, steady, and BYD is a rocket ship. It's going to be interesting to see the forecasts that they're making, the future that they're expecting for these companies, the discount rates that they're using, and ultimately what their valuations and recommendations are. Make sure if you've got any questions for anybody, for any of them about the companies and anything about their valuations, make sure to leave those questions in the chat. And if you want to learn more about the Valuation Masterclass Bootcamp and be able to do what these guys are doing, then go ahead and send us a message. All right, we're going to start with Eduardo. So let me bring Eduardo onto the call. Eduardo, we can't see your camera, but that's okay. We know how handsome you look. But I just wanted to talk for just a minute or two. Just how are you feeling? I know it's super early there.
Yeah, it's very early, but I'm feeling great right now.
Yeah, you're truly an early bird, and I know you've been working really hard, to get this done. So I'm excited to get you on. Are you excited to go?
Absolutely.
Okay. Well, then I'm going to bring up your presentation onto the screen. And when I do, I'm going to take myself out of the screen. So basically, you just start whenever you're ready, and I'm going to give you a 5-minute left warning. So we're aiming for about 15 minutes or so, and then we'll have some Q&A. I know for the audience, there's some people out there already. Let's just say hi. We've got Nene says hi, and also Moment. Finally, we're here. Yeah. And also we have Sutwin says hi, and Andrian says hi, and also we've got even a question already from Rajendra from Nepal, who says, for valuation, what's the minimum data required? Well, you're going to see some of the answer to that question. There's a lot of data that Eduardo has been pulling together, but you can do it with a lot less data. And finally, before we kick off, Moment says, you rock. So I think we're pretty much ready now. So what I'm going to do is bring your screen up on here, and I'm going to take myself off and just start the presentation as soon as you're ready, and take it away.
Okay. Thank you very much, Andrew.
Yep.
Good morning, everybody. Eduardo is here. Today, I initiated the coverage of BYD with a buy recommendation based on the current valuation, with a target price of renminbi 270, implying an upside of 14% from the current price. I derive my target price from a discount cash flow based valuation using free cash flow to the firm with a weighted average cost of capital of 9% and a terminal growth rate of 3%. Highlights: this is a fast growing and high efficiency electric vehicle company. BYD is getting into other electric vehicle areas such as urban rail transportation, and BYD's move to break into the production of clean energy opens new revenue streams. Among the risks, the geopolitical stress can harm my forecasts, especially the conflict China-USA political stress, and also the China's fundamentals are showing signs of weakness, and the price war is intensifying between Tesla and BYD. About the company, BYD was founded in 1995 in China. BYD is the leading manufacturer of electric vehicles. The company is also engaged in handset components. Originally, BYD was in the production of electric batteries, and in 2003, its founder decided to get the company into the production of electric vehicles. Today, 77% of BYD's total revenues comes from electric vehicles and 33 of the remaining revenues from the other products. 80% of total revenues for BYD, are in People's Republic of China and 20% overseas. The company has been growing very fast over the last 5 years and has become the second largest seller of electric vehicles in the world. Now I'm going to talk about my three stories on BYD. The first one is BYD is a fast growing and high efficiency electric vehicle company. BYD is a story of innovation and high growth. BYD has managed to grow its revenues at an average annual rate of 35% over the last 5 years. Also, during the last quarter of the year, BYD sold 525,000 units of battery-only vehicles, surpassing Tesla, which sold 484,000 units during the same period, making it a very profitable, fast-growing company. I expect BYD revenue just to grow at an average growing rate of 30% over the next 5 years. My second story is BYD is getting into other electric vehicle areas, such as urban rail transportation. The urban rail transportation business is an important area for BYD's future development. With its technology and cost advantages in the area of new energy, BYD has successfully developed medium capacity sky rail and low capacity sky shuttle with high efficiency and low cost. The branch is expected to have a positive impact on the company's EBIT margin for the following 5 years. BYD has moved to break into the production of clean energy and opens new revenue streams. An important move for BYD is in the field of clean energy. The photovoltaics business has a complete industrial chain layout covering silicon wafers, solar cells, photovoltaic models, photovoltaic systems applications. This segment today represents 5% of revenues, but I expect it to grow to 10% of revenues over the next 5 years due to the increasing demand for these products, which I expect would have a good contribution to BYD's net profit over time. I'm gonna mention some important aspects of the industry. The global automobile market valued at approximately almost $3 billion in 2022 is predicted to grow around to 3.9 billion by 2030 with a compound annual rate of roughly 4.5%. For 2024, the automotive industry is expected to face slow growth due to economic headwinds and high living costs in developing regions. The Chinese automakers are challenging the traditional automakers. Today, more than 7 Chinese automobile manufacturers, such as BYD, have managed to break into the top 20 rankings. Geopolitical problems and supply chain complexity remains the top challenge, particularly for electric vehicles. Globally spread, the supply chain depends on a variety of components from different countries, with major raw materials for electric vehicles batteries concentrated in nations like China, Indonesia, and Australia. This centralization makes it susceptible to disruptions, as highlighted by the Rocky Mountain Institute. What is next for the automotive industry? Well, autonomous driving, hydrogen fuel cell vehicles, and lightweight materials are the upcoming tides for the automotive industry. Here we have a comparison of quarters for BYD starting from third quarter 22 and ending third quarter 23. Here I highlighted the revenue and the EBIT items to show that the company is growing very fast in revenues, but with a strong EBITDA margins. So that's important. As you can see, BYD's revenues was up 16% for the third quarter of 23 and 38% year over year due to the strong sales volume of electric vehicles. The operating profit was also up by 73% with the positive effect of higher sales volume. Consensus estimates. From a total of 34 analysts, 19 are bullish about BYD's story, and so they strongly recommend the aggressive purchase of the stock. If we take a close look at the numbers, we will notice that the target price mean indicates a 47% upside when compared to the current market price. Thus the question is, why are so many analysts so bullish on BYD? A possible answer is that the analysts are placing a strong bet on BYD's ability to generate additional value through innovation and economies of scales, so that the EBIT margin is going to be even higher than the previous estimates. It is also remarkable that 14 other analysts are relatively neutral on BYD. There is only one analyst who is not so bullish on BYD. This analyst is probably worried about geopolitical problems, which is always a possibility and that could take a toll on the company's estimates. About the revenue structure of BYD, the revenues for BYD comes mainly from electric vehicles. But BYD also sells lithium batteries for electric vehicles and other gadgets. The core contributor for BYD comes from the electric vehicle segment, which accounts for 75% of the company's revenues. 25% of BYD revenues comes from batteries and other gadgets it manufactures. And BYD is one of the leading rechargeable battery manufacturers in the global arena. From a geographic point of view, we can see that almost 80% of the revenues of the company are generated in China and 20% overseas. Four elements of Stotts Academy. Overall, BYD appears totally unattractive relative to almost 2,600 non-financial companies in China, considering fundamentals, valuation, momentum, and risk. Fundamentals ranked in the top 20% in China due to high asset turnover. Valuation looks neutral as it trades on a low price to earnings growth ratio, but high price earnings and price book ratios relative to other companies in the Chinese market. Momentum is highly unattractive as both price and fundamental momentum have not delivered convincing results. Risk, the balance sheet risk is high, as we're going to see in a second, as the current ratio is relatively low, and this is because the company has been growing very fast. This is the world-class benchmarking and the Stotts profitable growth triangle. Profitable growth almost ranked the worst among 960 large consumer discretionary companies globally in 2021. However, in 2022, the rank grew to number 2 and slightly dropped to number 4 in the past 12 months. Profitability has ranked average in the past 12 months. Growth has been volatile but improved to number 1 from number 9 in 2022. Asset efficiency improved from number 9 in 2019, to number 5. And sales growth has been world-class since 2020.
5 minutes left.
Thank you. Profit and loss statement, we can see the EBIT growing very fast. Balance sheet items shows the health of the company. Liabilities also very healthy. The cash flow statement of the company with strong operating cash flow that is going to lead to strong EBIT. And here is what I was mentioning before, the current ratio, as I highlighted here, went from 1 to 0.7. It's a little low, but as you can see, the cash conversion cycle is pretty healthy. And the EBIT margin went from 7.2 to 7.6. Total return on equity grew exponentially, almost exponentially. Valuation, relative valuation. Regarding 2024 price earning multiple, BYD trades at a premium to the consumer discretionary sector in the developed world, Asia, ex-Japan, and the rest of the world. I expect a significant earnings per share growth of almost 60% higher than all of the peer groups. Here I highlighted some important ratios, and I consider the stock to be fairly undervalued. I assume as a risk-free rate of 3.6% and a market equity risk premium for the Chinese market of 6%. BYD has been a high beta stock, thus I assume beta of 1.1 times. I forecast a capital structure of 15% debt to equity, higher than the current level. This result is in a weighted average cost of capital and a discount rate of 9%. The terminal value I use is 3%, and my base case assumes 30% sales growth per annum until 2027, resulting in a value of renminbi to 70 per share, based on a free cash flow to the firm methodology. This is 14% upside potential as compared to current trading levels. In my sensitivity analysis, my optimistic case assumes 33% sales growth, and my pessimistic case, 27% growth. Here I have the sensitivity analysis and the risk. The geopolitical stress, China and the US is finally, if finally materializes, it could hurt BYD's growth, which in fact would negatively impact the valuation of the company. China's fundamentals are showing signs of weakness. China is the most important market for BYD vehicles, and it may be a threat if China slows down its growth and demand for electric vehicles. With a slowdown in China's economy, both price and quantity would be negatively impacted. Price war is intensifying. If the price war finally intensifies, it may have an important impact on margins and so on valuation. As it impacts EBIT, BYD is a relatively expensive stock right now as compared to its peers. So any hit in the market fundamentals will have a negative impact on valuation. Thank you very much.
Fantastic. All right, you've got some questions, so let's get into those questions. The first one is from Pantila, who says, "Can you explain more? Why do you expect 30% CAGR over the next 5 years, even when the competition is very intense in the EV industry? Where are they getting the growth?"
Yes. My first answer would be my recommendation is strongly based on the management of the company, which has demonstrated strong performance over the last 5 to 10 years. Innovation, as I mentioned, they are entering into new segments that are going to have a strong impact on revenues and EBIT. So this additional growth is coming from new segments of the company that I just mentioned.
Okay. All right. We've got another question from Lynn, who says, "As BYD revenue is mostly concentrated in China, with the current Chinese economy still looking bleak, will there be any negative impacts on BYD revenue?"
Yes, of course, there's almost a threat, as I mentioned in my last slide. Uh, China represents the 80% of BYD's revenues. If China finally slows down significantly, it will have a very negative impact on my forecast. Definitely, yes.
Okay. Another question is, Kelvin asks, "Do you know any of the brands that BYD provides electric batteries to?"
Uh,
I guess that's handsets, or what is that?
yeah, yeah, handsets and another products that the company, you know, uh, merchandise.
Mm,
It's not very clear in the
yeah.
in the
Okay. All right, let's look at another one from Andrian, who says, "What do you think of BYD's chances in the overseas markets versus EV and ICE, where it doesn't have geopolitical issues?" So, yeah, I guess the question is, maybe I can rephrase it a little bit by saying, what geopolitical or locations does BYD have a lot of opportunity? For instance, I see BYD a lot in Thailand, but they're facing some geopolitical challenges in Europe or something. Where do you think are the countries or the regions where they'll sell the most?
Well, Latin American markets are, are important for the potential of BYD revenues. Right now, they have been introducing aggressively electric vehicles in Latin America, and it seems to be high quality vehicles. So
Yep.
I think they have a great opportunity in Latin America, especially Brazil, which is the largest country in Latin America, but also in Mexico.
Mm. Yeah, I wonder. There was a question from Moman about the future. I wonder if 85% of revenue now is coming from China. In 5 years, would it be 50-50? I wonder, like,
It's possible. It's possible because, as I mentioned, the company is diversifying geographically and is expanding overseas. So I have no doubts that the company is going to perform well overseas, and they are going to increase their market share
mm,
in total revenues in the overseas segment.
okay. And last question from Superwan, in your perspective, what factors could affect BYD's value in the future? For instance, we see the EBIT margins very narrow. There's chance to expand that. Maybe think about your discount rate or any other factors. What do you think is kind of the most important thing that could drive the share price and the value up?
Well, definitely, a price war is going to mean very bad news for the company. That's
Mm,
definitely. Also, a slowdown in China's economy. It's going to be a very negative
mm,
event. Uh, but fundamentally speaking, and by this I mean the management of the company, I don't see any weakness in this company right now.
yep.
They have been doing great.
Okay. Excellent. All right. Well, how does it feel to graduate from the Valuation Masterclass Boot Camp?
Excellent. I'm going to miss this class.
We've had a great time. I mean, it's been great getting to know you and, seeing your dedication early in the morning like you have done. That's fantastic.
Yeah, I hope we can continue to see each other in the
Yes. Well,
future.
we should definitely be doing that. Let me ask you, if you compare yourself to when you first came in to the boot camp 6 weeks ago, how would you describe your transformation?
Great. I mean, one of the things that I noticed I have improved is like I'm doing right now. Sharing my thoughts in front of people uh, in a fluent way, um, sharing and refreshing concepts, which is very important for me, and that's what I finally took this class, and I'm great. I did. Um, I appreciate you got me into your class. It's excellent.
Yep.
I'm going to recommend your class to my colleagues,
Fantastic.
and I'm happy. Yeah.
I'm glad to hear that. And we got Andrian says, we will miss you too, Eduardo. Great job.
Yeah.
So,
I'm sorry about my camera. Something happened. It's a
yeah.
Logitech camera, but something happened. I don't know.
Well, we can picture your smile. Last question. How did you find out about the Valuation Masterclass Bootcamp, and what was it that made you decide I'm going to sign up?
Yeah. LinkedIn. From time to time, I used to share my thoughts in LinkedIn, and I saw this ad in LinkedIn. So I made a research on you and your academic, and I thought it was a good idea to get into it. So
Yeah.
I feel
Fantastic.
great to have that chosen that decision. Huh?
Yeah. Well, I want to congratulate you on finishing the boot camp. Not everybody does, as we've seen. So well done. And we're going to see you on graduation night on Friday.
Thank you very much, and thank you very much to all my friends in the boot camp.
Yeah, you got a lot. So Moment says great job. So all right, you can log off and go relax for a bit. And next we're going to bring up Mutia. So we will see you on Friday, Eduardo.
Yes.
All right.
Okay.
Yep.
How do I log off?
Okay. So that was a great presentation by Eduardo. And now it's time to bring up our next speaker, which is Mattia. And she's going to be presenting on Toyota. Are you all ready? Excited?
Yeah, excited.
Yeah. Um, I'm excited because Toyota is interesting. We got such kind of sexy stories in Tesla, Ferrari,
Yeah.
BYD, but sometimes slow and steady wins the race.
Right. Yeah, yeah. That's that what I thought too. They're very stable. It's like picking a husband and they're the stable ones.
Yes, exactly. I remember when I was young and I was in university and I had a girl who I was kind of interested in, and she said to me, "You're boring." And I and I said to her,
You're
"Someday,"
Toyota?
I said, "Someday you're going to want boring."
Okay.
So, all right. Well, I'm going to share your screen up here and let's get that up.
Okay.
And I think we're pretty much ready to go. So, why don't you take it away and then I'll give you a warning at 5 minutes when you
All
got five
right.
minutes left. Okay,
All right.
go for it.
Thank you. Hi, everyone. My name is Mutia. So I initiated coverage on Toyota Motor Corporation, or TM for short, with a buy recommendation based on a target price of Japanese yen 3,100, which implies an upside of 22%. I derive my target price from a DCF base valuation using a WACC of 8.5% and a terminal growth rate of 1%. So, what drives the revenue? The number one would be the slow growth of charging infrastructure, which supports demand for hybrid electric vehicles. I'll tell you more in the next slides. Battery electric vehicles, which is full electric vehicles, which are seen as a catalyst for revenue growth in the future. And then the third one would be the decades of stable gross profit margin, which demonstrates profit sustainability. Some risks would include slow adoption of EV, interest rate spikes, market volatility, increase in supplies and raw materials prices, and market share reduction due to increase of price per vehicle. Okay, so a bit of a story about TM. So it is now the largest car manufacturer in the world with revenue of over 270 billion in 2022. It currently operates in 170 countries, with the largest market being United States and Europe. So if we see all the presentation up to now, it's all about how the future of vehicles is EV, right? But range anxiety, high upfront costs, and lack of charging infrastructure remain key challenges for large scale uptake in most geographies, particularly in emerging markets. So that being said, the demand of HEVs, they're evident as they represented in TM sales up to 26% in TM sales in 2023, and they have been experiencing double-digit growth on average for the past 10 years. This causes me to forecast that HEVs will remain a significant revenue driver for TM in the next few years. And then, because they need to keep up with the trend, I think that battery electric vehicles or full EV will be a catalyst for revenue growth. So, TM is set to launch a full lineup of BEVs by 2026, aiming to sell 1.5 million or BEVs, or equal to about 20% of the projected BEV market. This is a tall order, as current BEV market leaders like Tesla and BYD are ramping up their sales efforts as well. But I think, nevertheless, TM is likely to be able to at least grow with the market, as the company already has strong sales and manufacturing infrastructure in countries where BEVs are growing. And then, as I said before, decades of stable gross profit margin. So TM achieved the stable gross profit margin of 17 to 23% at least in the past 8 years, and which helps ensure that the sustainability despite volatility. And these results are achieved through the management's tight control of expenses, through continuous improvement like increasing production efficiency, as well as logistic optimizations. Next is about the automobile industry steady growth. If you see the picture on the upper right hand, you can see that the growth of the vehicle market has been 3% CAGR. And we see the biggest market is APAC market. Um, because there's a large population and there is a low car ownership in this market, so that's why the largest growth is expected from the APAC region. And within this market, Japanese manufacturers, they're sort of the dominating brand. Toyota, for example, have the largest market share of 11.5% in 2022, and it indicates the brand loyalty and preference among consumers. How about EV? As you can see in the bottom right hand of this presentation, you can see that the growth of EV is expected to follow an S-curve pattern, meaning that the proportion should continue to grow over the next decade. So by 2030, we expect that 85% of the EV sales will be, vehicle sales will be from EV. Okay. Next would be the latest quarterly reports. As you can see, in the fiscal year 2024 first quarter, they saw a significant revenue growth. So just for a bit of a context, for Toyota F1 F fiscal year 2024 first quarter means April to June of 2023. So it follows a bit of a different fiscal year. Anyway, so they have improved their revenue by 24%, as well as their EBIT, as I highlighted here, it almost doubled on year basis. And the net profit has increased by 78% on year basis. So they're having a very good momentum in the last quarters. The next is a bit of about consensus estimates. It's not, it's not a share as hot as Tesla and BYD, I suppose, but most of the analysts, they're bullish on Toyota on buy, and the rest mostly issued hold recommendation, with one analyst issued a sell recommendation, and the mean target price shows almost 18% of upside. So. And in general, analysts expect revenue growth of almost 30% in 2023 and 2024. It decreases a bit and it normalizes to below 5% by 2025 and 2026. But as you can see here, the expectations on gross margin and net margin, it all remains stable. Okay, how about the revenue structure? So TM has several, they sell vehicle. That's their main revenue source. And they sell under a few brands, Lexus, Toyota, Hino, Daihatsu. And out of those brands, Toyota and Lexus they are the largest revenue driver, amounting to approximately 91% of the total cars sold. In terms of engine category, internal combustion engine or conventional cars contributes to over 70% of the vehicle sales in fiscal year 2023. The rest is actually from hybrid EV and a bit of BEV or full EV. So hybrid EV is the top selling EV type, with 2.7 million units sold in 2023. The last thing is about classification based on geography. So TM's largest market is North America, and then following behind that, it's Japan, Asia, and Europe. And these three regions represent almost 70% of TM's total sales in 2023. Aside from vehicle sales, they also provide financial services like loans and leases, but that is mainly to boost sales, I suppose. Okay. Next is this A-STOT's 4 elements analysis. So overall, it's very unattractive. And I think it is driven by two things, the fundamentals and the risk. In terms of fundamentals, it has a very low asset turnover in the last 5 years and also very low return of assets. The second driver of this worse ranking is that because it has a very high risk, because the a high net debt to equity ratio and low current ratio. And their beta compared to other companies in Japan, they're very volatile. It's very high for companies in Japan. But they are salvaged a bit by valuation and momentum. In terms of valuation, it's quite a good uh, um, note, I suppose. It trades on neutral because price to book value and price to sales is approximately one. And momentum, they're having a very good quarters. Recent revenue growth is accompanied by increase in net margin. So the next one is ASOT's profitable growth analysis. As you can see, the profitable growth is simply ranked in average. And I think lately it is driven by growth as well as a bit of profitability. In terms of growth, the revenue growth is very good in the past few quarters and in 2023 as well. So it looks like their growth is very good. And profitability is also ranked at average, and this is contributed by a very disciplined expense control by the management. As you can see here, it always ranks one of the best in terms of expense control, even though they have a very bad asset efficiency. Okay.
Five minutes left.
All right, all right. Okay, so profit and loss statements. So we can see that I forecast a revenue growth very high in 2020, quite high in 2024, and it normalizes up to 2028. Assets, you can see that there's a growing assets to comply with the revenue forecast, as well as liability. You can see increased liability and equity, but equity is always much lower than the liability because in essence they're a very high leverage company. Cash flow statement, you can see the net income is a bit of increasing. And as you can see here, gross profit margin and EBIT margin stable in forecast and in actual in the past 3 years. Ratios, you can see the volatility. Actually, here what I would like to suggest in this slide. Free cash flow data similar to the others. I think there's a bit of an increase in NOPAT so that we have a good valuation. In the FCF to firm, we can see an increase, as well as the FCF to equity is much higher than FCF to firm because they take out a lot of debt. In terms of relative valuation, TM trades at average value compared to the consumer discretionary sector in Japan. So just to be short, if I were to revalue TM to the 2025 PB2 ROE multiple of the world, the company is to be traded as 2025 PB of 1.7. Hence, it's a bit undervalued. So valuation and target price based on free cash flow method, I assume a risk-free rate of 1% and a market equity risk premium of 11%. I use a beta of 1.25 because that has been reflected in the past 3 years. And this results in a WACC and a discount rate of 8.5%. And I use a terminal growth of 1%. And use the FCFF to value TM because it has a very, very high FCFE. So my base case also assumes 8.6 sales growth per annum until 2028. And this results in an evaluation of 3,100 yen per share and a 22% upside. Okay. So in the sensitivity analysis, you can see in the next page, it is affected more by gross margin than revenue. So it's very sensitive to gross margin. So a bit of an increase can lead to a valuation from 3,400 if there is an increase in gross margin, and 2% decrease in gross margin can lead the share to be valued at 2,800 yen per share. This is a bit of the sensitivity analysis. You can see that gross margin and discount rate is one of the the growth rate is more sensitive than the revenue. And what are the main risks? The main risk is, I think, the slow adoption of EV because they have spent billions of yen to bet on EV. So if it doesn't happen, then it will stagnate TM's future revenue. And then interest rate spikes because it's a highly leveraged company. So if there's an increase in interest rates, um, their interest rate can affect their interest expenses as well as ability to raise capital in a timely manner. There's also market volatility, as indicated, in COVID-19 recession, for example, there's a dip in sales, increase in supplies and raw material prices because they depend on several or limited number of external suppliers, which makes it vulnerable to price hikes in case of supply disruption. And lastly, market share reduction due to increase of price per vehicle. So if we look at a bit closely, their price per vehicle is increasing up to 19% in the past 4 years. And this is higher than the consumer price indexes. And this may cause them to be, less competitive in the market. That's it. Thank you.
All right, excellent. We've got some good questions. One of the first ones coming from Moments is, why do you think that Toyota would win against all the EV extremists? And I think what he's talking about is, they're getting so much pressure. And, you talked about the hybrid electric vehicles, and Toyota's amazing with that. But that doesn't satisfy the people that want pure battery
Right.
vehicles. What's your reaction to that?
I think it's not necessarily a win. I'm not sure whether they will surpass, I don't know, the growth of BYD or Tesla. But what I'm saying is that they will probably can compete in line with the market growth. Um, so that's what I think. And that's because they have already had a good sales and distribution system in a lot of countries in the world. So they have a win in that way. Like, for example, Tesla and BYD, they need to build new, I don't know, distribution facilities or manufacturing facilities all over the world. So it will be more difficult and costly for BYD and Tesla to expand, for example.
It's a good point because people, Toyota's trying to make some push into EV.
Mm,
What people may underestimate is the fact that because they have the distribution system, they can get that out, pretty quickly,
yeah.
out to every single dealership that they have, so
Mm.
that's a good point. Okay, let's look at another one. This comes from Kelvin. Wouldn't Toyota interest in EVs contradict their sale of hybrids? Like, I think maybe would it cannibalize that, or would they be able to push battery electric vehicles and also hybrids as they're doing without any cannibalizing of the growth of each other?
I think that it's not necessarily cannibalizing. I think it's just a strategy on how you can allocate your manufacturing facility for hybrid versus EV. Because if you see all the forecasts, it's impossible to keep the production going at a growth that is stable. So I think it's not about cannibalizing, but it's just about how you forecast um, your production.
Okay. Um, let's see. Hold on. Moment asked the question. We kind of haven't heard much about hydrogen cars recently, but I just wonder, have you got any update on where things are at? I mean, is it a total loss for Toyota, or are they going to be able to get something out of this?
No, I think, if I didn't really read it in detail, but I think what I saw in the report is that they're also looking at hydrogen cars because I think they're trying to get an edge that is not from Tesla or BYD. So they're looking at other things to have this is Toyota, and they're looking at hybrid cars, fuel cells, so that that Mirai or Mirage car is a part of that new technology research.
Okay. Moment also asked about catalysts. What is the any catalyst for share price movement? You've got a 22% upside.
Yeah, I think it's mainly will be the revenue of the EV sales that will be a catalyst.
Okay.
Yeah. Mm-hmm.
Um, so Superwan says, how do analysts evaluate Toyota's growth potential and market positioning when determining a valuation for the company? Like, what do analysts think, or what do you think about, particularly because it is the leader, and trying to think, is it going to lose that position? As we hear, these big, BYD numbers and Tesla numbers, just tell us a little bit about the growth and market positioning.
Yeah, I guess that if you see, I mean, if we look at the vehicle historical, historical sales, there's a lot of volatility, right? But what I see is always increasing is HEV. So that's why I think if we see the data in real time, the growth is in HEV and EV. Whereas if you see things like, I don't know, um, ICE or the conventional cars, it's only growing in markets like Indonesia and Thailand, for example.
Mm.
And it's growing slowly, just, in line with the CAGR of 3%. So that's where, and it's slowing down as well. So that's why I said that EV and HEV will be the way to go, I suppose, and they can position their market, their place in the market because they have the infrastructure in place, uh, compared to Toyota, BYD, and Ferrari, I suppose.
Okay, how does it feel to graduate from the Valuation Masterclass Boot Camp?
I'm happy something finished so early in the year.
Yeah, that's a great accomplishment for the new year. How would you describe your transformation?
I think like Eduardo, it's a good refresher and kind of set better structure on what I do every day, and how I see these numbers every day actually, and but following your course, it puts a bit of structure and overall bigger context on how business are run at large.
Mhm. And remind us how you found out about the Valuation Masterclass Boot Camp, and why did you decide to join?
Oh yeah, I have a connection from AWR Lloyd in my LinkedIn, and they posted your class actually, and I was interested to join, just to learn more, I guess, and to have a better edge in valuation knowledge. So
Mhm.
that's why I
Okay.
joined this.
All right. Well, that was great. Great presentation. And now it's time for you to rest and relax and get on with other things you probably have to do. And then we'll see you on Friday night for graduation.
Thank you.
All right.
Bye.
Take care. Good. Bye. Well, that wraps up tonight's two presentations on BYD and Toyota. Eduardo and Mattia have both done a great job in the Valuation Masterclass Bootcamp. And I'm looking forward to our graduation, which we have on Friday, to celebrate. In addition, I know all of our other students are right now submitting their videos. And so I'm looking forward to seeing all those. So I want to cheer on all of our current students, and I want to see everybody in our graduation ceremony. And if you want to become a valuation master, why not join the Valuation Masterclass Bootcamp? I'll see you in the next bootcamp.